हेलो फ्रेंड्स, वेलकम टू आवर चैनल शेयर की तबीयत बुल और बियर. Friends, we are here to discuss certain matters or certain information relating to the Dodla Dairy IPO. So the IPO in second day is subscribed 3.5 times. Okay, now the IP. Okay, tomorrow is the last date for the investment in the Dodla Dairy IPO. So friends, the IPO, the total offer size of the is rupees 520 crore rupees, and out of which the fresh issue is rupees 50 crore, and OFS, that is offer for sale, that is anchor investors can sell their shares, okay, is rupees 470 crores. The price band is rupees 420 to rupees 428. Okay, the upper band is 428 rupees. Offer period is starting from June 16 and ends on June 18, that is tomorrow. So please subscribe this IPO. The market lot of this IPO is 35 shares. It should be listing on the NSE and BSE stock exchange. The minimum investment for one lot of 35 shares is rupees 14,980. Then expected date, that is when the listing or allotment of the shares has been made. So the finalization of the allotment has been done in 23rd June 2021, where the investors know that how much lot he gained from the IPO, or makes a refund in the next 2 days, that is 25th June. Okay, if there is no any lot is subscribed in the investor's name, if and it should be listed in the 20th June 2021. So friends, the IPO proceed, okay, which will be collected by the company is utilized for the repayment of their debts, okay, of the HDFC Bank rupees 322.64 million and Shanghai Bank Corporation Limited. So another funding increase, okay, there is a requirement of the incremental capital expenditure for which the proceeding has been utilized. And third thing is general corporate purposes. Now friends, we know about the company. So Dodla Dairy Limited is a public limited company but not listed. So he issued the shares for their listing and having its registered and corporate office at Hyderabad in Telangana state. It is the third largest private dairy in India. The company has a procurement center in 5 states and products are available in 11 states of India. It has 94 milk chilling centers. Some plants are ISO certified and company have 40 sales offices, 3,285 distribution agent, 861 milk distributor and 544 milk product distributor across 11 states of India. Dodla Dairy Limited is now the business model. The business model of the company, that is chilling center, where the procurement has been done. So how the procurement has done? So raw milk, okay, is collected, and because it is a raw material for the dairy, then this collection has been done from 5 states in India, like Andhra Pradesh, Telangana, Tamil Nadu, Karnataka, and Maharashtra. It should procure the raw milk on an average of 1.03 million liters raw milk per day. Friends, 1,09,670 farmers are directly associated with the company. 6,671 villages, there is a collection centers of that company. So on that basis, the procurement has been made. There is a 94 chilling centers, 254 dairy farms of the company. Then when it should be procured, it should be quality, that is on goes to the processing center, through the raw materials should be collected through the tank on the basis of the tank. Then it should be goes to the processing center. There is 13 processing units of the company which are working in the Andhra Pradesh, Telangana, Karnataka and Tamil Nadu and having capacity of 1.70 million liters per day. Two plants in Nerals and Vedant Sandur having capacity 15,000 to 10,000 kgs per day. Then processing line is fully automated and it should be efficient in its operation and high product standard has to be maintained during the processing. Thereafter, we are focusing on the milk value added product, that is distribution and marketing. So we know that there is a 40 sales offices, 3,285 distributor agents, 861 milk distributor and 554 milk product distributor of the company. So on that basis, the value has been passed to the customer. So and there is different product also involved in it. The product which will be manufactured or created by the company or the dairy should be listed and on the and the contribution into the revenue is also shown in the EBITDA margin column. So it should create fluid milk. It contributes 4.6% in the profit. Ghee is contributed 20 to 22% margin. Paneer contribute 90 to 21% margin. Butter 17 to 19%. Curd 19 to 21%. Ice cream 37 to 39%. SMP 6 to 8%. Yogurt 24 to 26%. Khoa 14 to 16%. Cheese 29 to 31%. Wheat 27 to 29%, and buttermilk and lassi. All these products should be seen on the basis of the distribution and value or pass. So friends, there is growth in the value of the product. Not value but the selling of that product or the generation of the revenue during the year or during the 9 months of the 21 years has shown growth, because in financial 15 it should contribute 2783 83 billion rupees in fluid milk contribution in the revenue, which is now 4,359, and the company has an objective to it reaches 6,000 billion rupees in financial year 25. So there is a projection in the financial year 25, and the current 9 months sale has to be recognized in the financial year 21. So these are the product portfolio managed by the company. and also there is some diversification, and a new product line has to be established by the company in the near future. And okay, so now we are focusing on the management of the company. So Dodla Sheshak Reddy is a chairman and non-executive director of the company, and which is associated and having experience of 22 years and responsible for effective decision making. Dodla Sunil Reddy is a managing director and having 25 years of experience in dairy industry, and he is responsible for setting up a business strategy and having other experienced team members also, okay, to manage the company. So friends, here we can see that the management have an experience more than 2 decades. So it shows that the capability and competency of the management. Now we have focused some key financial highlight. On that basis, we can judge the performance and the position of the company. Friends, as per the restated financial information, okay, the data should be given in fiscal 18, that is financial year 2018, 19 and 20 for the comparison. Friends, the net tangible asset is increases from 3388.71 in financial year 2018 to 3794.60 in the financial year 20. So operating profit is also uh, increases as compared to 2018, but due to COVID situation it should be reduced as compared to financial year 2019. The net worth of the company has been increases, okay, from 3395.32 in the financial year 2018 to 4334.96 in fiscal 2020. It should be in rupees in million. The monetary asset has also increases, that is cash is increasing rapidly, so it should be a cash rich company. Then monetary asset as restated and consolidated as percentage of net tangible asset is 18.11%, so in financial year 2020, and it should be increasing one. Okay, so friends, as compared to this, we see that it's a cash rich company and the monetary asset is improvise in a rapid sense. Now we are focusing cash and cash equivalent. Friends, in okay, it's a cash rich business because the company can collect the cash from the end users, so there is no credit, okay, is involved in it, so it should be a cash rich business, dairy business. So friends, in 2018 the cash is 139.17 million rupees. In 2019 it should reach 214.48, and now in 2020 it should be 686.73 million rupees. But in 9 months he reached 582.35 million rupees in 2020-21 financial year. So friends, but it's only a 9 months data till 31st December 2020. So the company generates cash from their operation, which also shows in the below figure net cash generation from operating activities. The operating activity in 2018 generates 874.51 million rupees. In financial year 2019, it should reach to 1355.94 million rupees. In financial year 2020, it should reach 1655.81 million rupees, and for 9 months it generate 1954.15 rupees. But the net effect of the investing activity and the financing activity, which should show in the negative cash, that is cash outflow. Okay, cash outflow. So on that basis, the adjustment should shows that it should generate 582.35 million rupees in 31st on 31st December 2020. Now we are focusing on the the profitability or the performance of the business on the basis of analyzing the profit and loss account for the financial year 2018, 19, 20, and 9 months of the 2021. So revenue from operations, friends, revenue from operation is as compared to the 2018 is 15,904.75. Now in 19 it should be 16,916.73, and in fiscal 2020 it should be 21,393.73 million rupees. But due to COVID situation, it should decrease in 9 months in 2021. It should goes to 14,135.12 million rupees only. So there is a decline due to COVID situation. But also there is a decline in other income also. So total income which is generated in within a 9 months of 2021 is 14,170.35 in 2021 but as compared to 2019-20 or fiscal year 2020, it should shows a revenue of 21,456.49 million rupees. So because of COVID, there is a dent in the income. So expenses, we can see that we directly goes to the total expenses column. The total expenses in the in 9 months of till December 31st 2020 shows 12,549.07 million rupees. Million rupees, as compared to fiscal year 2020 it should be 20,637.78 million rupees. So on there we can see that there is some reduction in the cost. That is, the company can control their cost. The profit before tax is also increases, or we can say it should be a double in within a 9 months. In 31st December 2020 it shows 1621.28 million 8 million rupees. In 2020 it should show 118.71 million. Now we are focusing on the net profit of the company after considering the tax expenses. Friends, the profit is also, we can say, the we can say it should triplicate or 200% increase in the profitability, because at 2020 fiscal 2020 the net profit is 498.71 million rupees, and in December or in within a 9 months it should be 1163.85 rupees million rupee. So friends, the revenue generation capacity or the managerial performance or company performance are very good, or we can say best in nature. Now we are focusing on the other financial information. So friends, the okay, basic earning per share, okay, is also increases from 8.96 in the fiscal year 20 to 20.91 in the okay, 9 months of the 2021. Okay, diluted EPS. Okay, EPS is also improvising in nature, or it should be in rapidly improvise, we can say that. Then return on net worth or return on equity, which shows that it should increase 11.50, okay, to 21.17. So it jumps very well, okay. The net asset value per share, the net asset value per share, that is NAV of the company, is also increasing rapidly in within 9 months of 2020. So it involves another 3 months revenue, so it goes above 100 rupees, okay. So it's the results, okay, or the contribution is well. Then EBITDA, that is the profitability after okay, we can say the net profit is also improvised. In the financial year 2020, it showed 1409.26 million rupees, and in 9 months within 21 financial year 21, it shows 2065.08. So the performance of the company is very good as compared to the, okay, now we are comparing the peer review, that is comparing with the listed okay, listed shares with the data of the Dodla Dairy Limited. So on that basis we can see that whether the issue is reasonable in nature or not. Okay, so on that basis the revenue capability of Huston is 53.0383, okay, million rupees. Heritage Food 26,811 million rupees, and Tirumala Milk Product Private Limited shows 18,033 okay, million rupees, and Dodla shows 21,393 million rupees. So friends, Dodla, okay, is a we can, on that basis we can see that Dodla Dairy is the third largest player in the dairy farming in India on the basis of the revenue. So revenue growth, okay, from financial year 2017 to 20 in percentage, the Dodla gives 14.1% as compared to others. So it should shows higher revenue. Then contribution from we okay, contribution, the contribution is also increases from their product. And friends, the EBITDA margin is also 11.5%, okay, of a Tirumala milk product, and Dodla Dairy shows below the Tirumala product, gives a higher margin of the product. So PAT is, okay, PAT is also shows the third position of the Dodla in, okay. Then PAT margin also shows it should be a third position. Return on net worth, it also in a third position, and it gives a positive return, okay, on the net worth, capital employed, on gross asset to turnover ratio, working capital cycle is, okay, the working capital cycle is 11 days. So on the within 11 days he generates cash. Now we are focusing on another financial okay ratios. Dodla Dairy Limited, okay, having a face value of rupees 10, Parag Mill Foods also have a 10 rupees. Then P ratio. The P ratio, okay. The P ratio now is 12.56x Parag Mills Food and Huston Agro 123. Okay, so the P ratio is also reasonable of the Dodla Dairy Limited. Now net profit. Net profit also shows the Dodla Dairy Limited having third position. Earning per share, okay, on is comparing to the earning per share, we can see that the Dodla Dairy performs is in a second position. EPS diluted also shows in a second position of the Dodla Dairy. The network, friends, the network, on the basis of network, the Dodla Dairy shows third position after the Houston Agro and Parag Mill. Then return on network, okay, it shows second position, okay. Then net asset value equity shares, okay, it also shows a third position. So it should be diluted its position to second and third, but as compared to the others, okay, the growth capacity is more in the Dodla Dairy. So we can see the here that the Dodla Dairy's revenue is increasing in trend. It should be increasing 14.1%, and he as compared to the others, he is in first position. So it's a growth oriented company. Now there is certain risk involved in that, because he is focusing on the south, okay, south section of the India only. It does not be, okay, that is his manufacturing plant is only okay, south section. If any floods, okay, or natural calamity or any others, okay, affected the south section of the India, it should affect the company in company and their financial position or financial performance. So this is the risk involved in it. So friends, we are enumerated risk in below for the your references. Please read it. Then there is an anchor investors holding, friends. The anchor investment also subscribe, uh, okay, the DSC small cap fund subscribes 16.66% of investment. Ashoka India Opportunity Fund 13.46%. IIFL Special Opportunity Fund 12.17%. SBI Magnum Mutual Fund 8.33%. Okay, or some other mutual funds is also involved in it. Friends, the brokerage gives also a report of the subscription. Okay, the Reliance Securities uh, gives a reason that the going forward there is a sustainability of the improvement in the performance, okay, of the Dodla Dairy, and so the valuation in the medium term is also increasing in nature. Then venture securities, okay, is gives a rating of subscription on the basis of re-rating of the valuation given in the market leadership, strong sectorial growth trend, improved efficiency, debt-free status, and high return ratio. On that basis, he gives a subscription views on the Dodla Dairy. Then Angel Broking also gives a subscription view uh, because increase in the value-added product makes improvement in the operating margins and working capital cycle. So on that basis, we can see that the we can see that it is made for the subscription and it generates huge profit for the investors in the near future also, in the medium term also, and in the long term also, because the dairy perspective is increasing in nature. Now, friends, it should be in a, as compare all the data, we can see that it should be in a reasonable value. Okay, the valuation is reasonable. You friends, you must be subscribe such issue, because there is a reasonable valuation and there is a opportunity of increase in the share price in the near future, or on the basis of the listing gain. Okay, medium purpose also and long term purpose also. So most of the, okay, so in second day, okay, the retail, okay, the total subscription goes to 3.5 times. 5 times. This shows that the lot of the investors are interested in the shares of the Dodla Dairy. So it generates a huge profit. Okay, huge profit to the investors in the listing, or we can say the listing gain. So, okay, also the, we can say the gray market premium is also increasing in nature, and it should be more than 50%. So friends, okay, for the listing gain also, you can subscribe such IPO. For the subscription, okay, on that, okay, you can done through your demat account. So friends, please subscribe, and please comment, okay, subscribe our channel, and click on bell icon for the update. Thank you.